We are living through a full-blown AI revolution, right? This is the moment that's supposed to change everything. But, something really weird is happening on Wall Street. There's this paradox playing out that is even the smartest investors kind of scratching their heads. And yeah, this is the heart of the matter. You've got companies at the absolute top of their game posting just mind-boggling profits and talking about these huge, ambitious plans. But the market? It's reacting with what looks like panic, not a party. So what is going on here? Let's try to piece this puzzle together. I mean, just look at Google's parent company, Alphabet. For the first time in their history, they blew past $400 billion in annual revenue. That is a historic milestone, no matter how you slice it. But the market's reaction? The stock tanked, dropping almost 8%. This isn't just a small disagreement. It's like performance and perception are living on two different planets. So what's really behind all this fear? Well, it boils down to one simple, massive thing: the absolutely staggering price tag for building this AI future. We're talking about numbers so big, they're making investors really, really nervous. This is the number that just sent a shockwave through the entire market, $185 billion. That's the high end of what Alphabet is planning to spend on capital expenditures in 2026 alone. This is way more than just an investment. It is a colossal bet on the future of AI. And to give you some perspective on that, Wall Street was already bracing for a huge number. They were thinking around $120 billion, but Alphabet's forecast could be more than 50% higher than that. That is exactly the kind of surprise that spooks investors and makes them completely rethink what a company's costs are going to look like down the road. If you're still trying to wrap your head around that number, listen to this quote from Bespoke Investment Group. They basically point out that with its planned spending, Alphabet could just buy almost any other company in the S&P 500. It's a truly mind-bending amount of money. So here's the critical thing to understand. This isn't just an Alphabet story. This anxiety over these insane AI costs is spreading like a virus across the whole tech sector, and it's hitting other giants who are all in the same race. And you can see it playing out everywhere. Amazon's stock is basically treading water because analysts think its own AI spending could easily top $150 billion. The chipmaker Qualcomm got hammered even worse. It dropped 11% when it warned about future headwinds. For all of these giants, the market is screaming the same thing. We need to see a return on these crazy investments. And this quote from Russ Mould at AJ Bell just nails what's happening. There's a big rotation going on. Investors are starting to pull their money out of the companies spending billions to build the AI, the infrastructure providers, and they're putting it into the companies that are already using AI to get more efficient and make more money. Now, this anxiety over tech spending isn't staying in its lane either. Oh, no. It's sending out these ripples that are hitting parts of the financial world you wouldn't expect, especially the crypto market. Okay, to get this, some analysts at Stifel came up with this brilliant analogy. They call it the Benjamin Button effect. See, for years, Bitcoin kind of acted like it was aging backward. It would get stronger when traditional money, like the US dollar, got weaker. Everyone saw it as a hedge. But now, that whole relationship has done a complete 180. As you can see here, the rules of the game have totally changed. Since 2025, Bitcoin has pretty much stopped being that hedge and started moving in lockstep with the Nasdaq. So when tech stocks get pummeled because of worries over AI spending, Bitcoin gets dragged right down with them. It's tied to the exact same sentiment now. Which kind of brings us to the big picture. JP Morgan summed up this entire moment perfectly. They call it a period of both promise and pressure. Right? The promise of AI is obviously enormous, but the pressure from the cost and the uncertainty, well, that's creating a really treacherous path for investors to walk. So if investors are shifting their strategies and looking for a whole new playbook, what does that even look like? Because this isn't just a bit of market turbulence. It really feels like the beginning of a new economic era. And that means the old strategies just might not work anymore. So JP Morgan's outlook gives us a few clues. It says, first, you have to be positioned for the AI revolution. But you got to be smart about it. You want the upside, but you don't want to get burned by the hype. It's about finding those companies using AI, not just building it. But then the strategy gets broader. It advises investors to think about resilient supply chains, to get ready for changes in inflation, and even to start looking into private markets to find that next wave of innovation. It really feels like we're all on a journey into uncharted waters. You've got these huge forces, AI, global fragmentation, shifting inflation, all creating this new frontier. And to navigate it, we're all going to have to think a little differently. Which leaves us with the billion-dollar question, or maybe the $185 billion question. The promise of this revolution is absolutely undeniable, but the pressure from its astronomical price tag is just as real. So the great challenge for all of us is, how do you embrace the one without getting crushed by the other?